let's say inflation goes back and stays even at 3%, if gold can now do better than 3% per year in returns, and I think, again, if my target of 2,500 is correct, that's a much bigger gain on gold.
I'm joined again this month by Gareth Soloway of Verified Investing, the chief market strategist. And we're going to take a look at the charts. And in particular, we're going to have a look at gold and silver, but maybe a few other things. Gareth, welcome back to the channel.
It's great to be back. Thanks for having me.
Always a pleasure having you on. Always entertaining and informative. I suppose we'll kick it off because since last we spoke, we've seen gold hit an all-time high. Silver hasn't quite done that by a good bit yet. But let's take a look at the state of the chart now in gold to start with and get your thoughts on it.
Yeah, so what we've seen gold do is just continue to hammer on this resistance level. And you're right, we did hit a new all-time high back in December. In early December, we kind of peaked up and had this real quick pop. It happened just as the futures on Sunday night Eastern time here in the U.S. opened. So there wasn't much volume. A lot of people, I think, made a lot out of it. But to be honest, if you look at the volume, it wasn't a big deal at this point. For me, I still think gold is on the verge of having a big breakout. If you look at the chart formation, we got the shoulder, head, and shoulder. It's an inverse head and shoulders pattern, and it's a very bullish pattern. And the more you hit this resistance line around 2075, the more likely you break out. And once the breakout occurs, I think people in general, if you look at investing and allocations, gold for a lot of people has been kind of left behind. They aren't allocated like they were or they used to be. So I think there's a lot of money on the sidelines that would potentially move into gold, but they need that excitement. And right now it's still struggling to break out.
So we're looking for that daily close basically over the 2075.
That's what I'm looking for, right? Exactly. And I think once you get that, you'll see the uptick start slowly, and then really once we start taking out even this high from at around 2145, that'll be really where the news media starts picking it up in major force, and that'll be where people start to really chase.
Sure, and as you say, that was really just an intraday high on not great volume, relatively low volume, so it doesn't necessarily have the same credibility as
and you can see
closing.
Interestingly enough, you can see the same kind of pattern that we're forming now was in the charts back in 2014 to 2019, right? So you had actually a five-year period where you just kind of pulled back, you hit, you pulled back, you hit, and finally you broke out. And that, notice again, same kind of deal where we broke out right here, then consolidated, and then that's really where the momentum came in. And really, interestingly enough, the big moves usually come at the end of moves, and you can see the vertical part right here was the last kind of big pop. That's where you got every last person to get on board, and then the new high was put in, and then it has done the same thing. So kind of expect the same thing. The initial breakout will get a little bit of a pop, consolidation, and then eventually we'll see the more cataclysmic or the more powerful move to the upside.
Do you think we risk further to the downside at the moment before we see that break, or do you think that break's imminent?
Yeah, my guess is it's pretty imminent. I think that, again, we're seeing that CPI data last week here in the U.S. was a little elevated. PPI came in a little lower than expected, but I still think that the fear trade, we're starting to see more going on geopolitically in the Middle East. Things are kind of getting more and more tense there, starting to break out in little skirmishes everywhere. And I do think that, again, the world is more on this path. And even if the U.S. elections, right, you could talk about Trump had his Iowa caucus. He dominated, right? And it's going to create a lot of tension here in the US. And I think gold can be a recipient not just from a weaker dollar or from the inflation trade, but also from the fear side of things.
Sure. So we've got tension in the Middle East. We've got let's call it political polarization as well. We've got other hotspots around the world as well. It's not just the Middle East now, but there is an opportunity to or not an opportunity, a potential for this to escalate into something greater. We've even got a bit more tension in the Far East between China, US, and Taiwan.
That's right.
Okay, so if we're looking at this from a fair trade, there's money on the sidelines wondering where it is going to go. Once we see a close over 2075, there's a good chance that we'll see gold a lot higher on the back of that demand.
Yeah. And again, my what I like to do is just try to go to the charts and let them tell me. And if we just draw, here's your left shoulder of your head and shoulder, here's your right. and then here's your your right shoulder here.
Mm,
So that's your inverse head and shoulders. And one of the things you do here to do the measurement of the calculation, and this again, by no means does this tell us exactly if it's going to achieve this target, but
sure.
you take that distance here, which is about $460, and the concept would be is that you should do that equal amount, $460 to the upside here, in if to complete this pattern. So the pattern is an inverse head and shoulders. Upon trigger, it has a destination that, assuming everything stays as is, that would be where it hits. And that would be up here around 25 and a half, $2,550, give or take. So there is a significant amount of upside in terms of timing it. Like, is that a 2 year target? Is it a 1 year? My guess is in the range of 1 to 2 years. The
Mm,
only thing we can do here is if we go back to this period where we had that breakout over here, from when the breakout started, it was about 300 days, right? So
mm.
that's the time it took. So that kind of does put it in range where end of this year, early 2025 could be where the target is achieved.
Very interesting. Now, silver, if we look at silver, silver has not performed as well. We have not seen a new all-time high intraday or otherwise in silver. What's going on
Yeah.
there, according to the
Yeah,
charts
so
anyway?
so I think silver, silver is it's become more and more of an industrial metal, and I think that takes a lot of that fear trade, offsetting weaker dollar kind of trade out of things. And again, I think that we're seeing more and more underlying signals. We got the New York Manufacturing Index today came in at minus 43.5. And again, it's not like the jobs data or one of these big economic data points, but just incredibly weak. And I think that smart money is sniffing out that we're not out of the woods for a soft landing or no landing at all here in the U.S. And I think that is hurting the silver trade right now. So again, you could see that you retested this down sloping trend line here, going all the way back to those same highs. So the interesting thing about this with gold is you can see the difference, right? The gold chart's much stronger because the gold chart has a flat line from
Mm.
2020. Silver's declining. Now, it doesn't mean it won't break out eventually. It's just clearly showing us that there's weakness when compared to gold's price action. And so, again, we could even see right here, you had this little upsloping connector, and we kind of have broken below, and we're kind of hovering just below. It opens the door for silver maybe to touch 2150, 2145. Now, again, if you look at a bigger time frame, right, if we go to our bigger view, our monthly chart, the monthly chart is still bullish. So what this tells me is that shorter term, the next 6 months, 3 months, you may see some weakness. But if you look literally years out into the future, the silver trade should still do very, very well. And eventually it should break to the upside. And again, if we think about de-dollarization or just the dollar, weakening overall, it does make sense that eventually almost all commodities will trend higher.
So short term, we've got vulnerability potentially in silver with the long-term trade still intact there.
Correct. Yes, absolutely.
Okay. Now, all these things don't happen in a vacuum. And one of the things that's been hitting the headlines of late is the stock markets. And we're
Right.
seeing stock markets at or above, or close to all-time highs. Is that a trend that we think is going to continue?
Yeah, it certainly has been resilient. In fact, today alone we had some early weakness, and we've kind of roared back to be flat on the day. There's this underlying bid in the market that continues to be there, whether it's because we have so much money in money markets, or it's just this belief in that the economic situation won't deteriorate to a recession. It's hard to know for sure, but what we do know is that we have a trend line here that goes back to our pre-COVID high, connected perfectly here through these lows, through this low, through this high. We even
Mm,
kissed it right here. And that's kind of what we're bubbling up against it right now. So shorter term, you have some resistance around 4,800 on the S&P 500. If that breaks, we should easily achieve that 5,000 level on the S&P. And it wouldn't shock me, to be honest, just because even numbers have such an important role psychologically in all markets, all asset classes. There's something psychological about getting it above that 5,000. It convinces the last bulls to go long. And then once you have the last people long or buying the market, there's a void of buyers, and the
sure.
markets can start to correct. So, right now I'm looking and saying, okay, well, let's see if we get above 4,800. If we do, then I think you go to at least 5,000 or pierce 5,000 before a more significant correction. I will say this though, that I do think there are storm clouds on the horizon. Whether it's geopolitical, like we mentioned, tensions in the Middle East, in Taiwan and China, or even just here domestically in the U.S. There's so many potential pitfalls. It's like a minefield
Mm.
that at some point I do think that something goes wrong. Like we're asking the Fed to land the plane perfectly with no repercussions. I've been looking at balance sheets of banks. Banks have massive losses on their balance sheets from commercial real estate. In fact, up to 33% losses versus during the Great Recession, it was only 5%. So there are underlying rotting issues in the core of the economy and the banking system. But right now, the market is cruising on this dream that the Fed will just print us out of any issue.
Okay, maybe tie this together. Maybe we got a dollar chart there that we could look
Yep.
at and see what we can interpret from that.
Absolutely, yeah. So the dollar had fallen quite a bit. If we zoom out on this chart, I love these charts. Right, we have the high on the dollar from September of 2022 connected to these highs.
Mm.
That perfectly, a parallel line perfectly connects high to high to high, and now to the low here, and we've kind of bounced back up. So this to me tells me we're in a downtrend in the dollar, but we still could see a little upside. Which if you think about the fear trade, right? If we do get more instability economically or globally with other countries, then the dollar would gain. But either way, we're still in a downtrend. Your upside would be 105.70 on the Dixie here,
Hmm.
and overall still trending down. So I think again the longer term is still down, but you have to expect these little whips on the dollar based on issues globally.
Okay, maybe we could just take a look back to the theme of gold again. If we could take a look at something like the GDX, if you've
Yeah,
if
sure.
you've got that, because one of the things that a lot of people who are interested in gold are also interested in is obviously is gold stocks. But what we've seen is with gold hitting all-time highs, the GDX is nowhere near that.
Yes, yeah. And again, I think investors they love gold miners because you can get such a big bang for your buck out of them versus gold. Gold is more slow moving usually. The miners can really have big moves, 10% moves in a day sometimes. But people have to remember that because of the inflation bug that hit us, you had a lot of their costs going up tremendously. The labor costs, the the different machinery that they were had to buy to drill were going up, and gold price, as we saw in that previous chart, has been sideways hitting on this 2075 level for the last few years. So
Mm.
there wasn't a benefit, right? They had a lot of higher costs, but gold price wasn't compensating them for that move. Having said that, the GDX is forming really bearish, very bullish price action. And again, just to show you a couple things here, we have that same inverse head and shoulder pattern here, classic little pattern formation, which at some point I think it breaks out to the upside. And so I am very, very bullish on the miners from here because the idea is if let's say inflation goes back and stays even at 3%, if gold can now do better than 3% per year in returns, and I think, again, if my target of 2,500 is correct, that's a much bigger gain on gold, then these miners are going to play serious catch up to the upside as that gold gain or the dollar that they're selling gold for is so much greater than what inflation is. So they should make it back, but we need gold to break out. Once you get gold on that bull run, the catch up trade is going to be definitely in the miners.
So if we see the sustained break above 2075, look for some action in the GDX as well.
Yeah, yep. And again, the quicker gold can advance, surpassing, let's say, 3% inflation, which is around where we are right now, that's the better scenario. The worst scenario for the miners would be, small gains on gold of 3% a year, where, their inflation is 3% as well. Then they cancel each other out, and then price probably stays for the miners in here. But I think gold, again, you'll get, 10, 15, 20% out of it at minimum in 2025 here or
Fantastic.
2024.
And maybe the last thing we might just have a look at crypto. Maybe we'll have take a quick look
Sure.
at Bitcoin. There's a
Yeah.
lot of
So
talk at that at the moment, particularly around the ETF.
yes, and again, this is one of these scenarios where investors you have to kind of temper your expectations. It was a great run on crypto, but it was almost straight up. I mean, you didn't really have any downward moves. You had, even from here to here was still grinding up, and same thing here to here. So it was kind of everyone was buying into this spot ETF, and once it happened, it was kind of the okay, it's done. Now it's a sell the news event, and that's exactly what we saw. We saw it kind of touch this 49,000 level and then come right back in to kind of where it's been trading now for the last, really since early December. And
Hmm.
so again, I think that investors, we have to watch very closely what formation off of this down move is made. Is it a bear flag, in which case we could dip to 38,000? Or if we can zoom back up, if we get back to 46, 47, we still could be talking about a move up. But it makes sense to me that it needs to consolidate a little bit. It's like running a marathon, right? If we look at this, the run in Bitcoin from October was massive, from 26,000 to 49,000. It was like running a marathon. You can't just run another marathon after you do one marathon. You got to kind of refuel, you got to rest a little bit, and then you can go on your next leg higher. So ultimately, I still remain longer term bullish on Bitcoin, but I wouldn't be surprised if we trade back to 38 or even 30,000 on Bitcoin before that next move comes.
Right. So it's been a real case of kind of buy the rumor, sell the fact on Bitcoin.
That's exactly it. Yep.
Fantastic. Verifiedinvesting.com is the URL, correct?
Yes, that's
Okay.
correct. Yep.
Well, listen, Gareth, fantastic to have you on again. We'll have you back on again in a couple of months and we'll check back in and see how we're doing at that stage on the charts. But for now,
Wonderful.
Gareth Soloway, thanks
Thank
for
you so
joining us.
much.